Hi everyone, my name is Joseph Mureithi. I'm a real estate research analyst at Cytonn Investments, and today I'm going to take you through the current trends in the real estate landscape in Kenya. So majorly in the retail sector, in real estate, the sector is majorly dominated by major retail supermarkets such as Naivas, Carrefour, and what we've observed recently is that there have been slowed expansion of major retailers and compared to yesteryears, and because the retail chains or the supermarkets or major retailers they are taking a keen observation of what is happening in the market and the changing consumer preferences. And another thing that we've noticed is that now retailers are preferring to go near residential areas compared to yesteryears where retailers majorly centered themselves in major urban areas. Another key observation that we've seen is that retailers nowadays they are preferring to shop online compared to going to physically in the supermarkets, and this is a trend that started taking shape especially in 2019 in the middle of corona pandemic or the COVID-19 pandemic, where major people did not prefer going outside, and that has continued pretty much from 2020 till now. And another observation we've seen, despite the slow growth of major retailers in Kenya, we've seen new entrants coming into the market. For example, the Panamat and the China Square, which I believe opened its latest store in Mombasa County. Majorly is comprised by warehouses and data centers, and what have been trending is that we've noticed there is a growing demand in warehouses, where this is driven by the increase in e-commerce, where operators in the e-commerce business are compelled to look for more industrial spaces, which is compelling them now to look for more spaces, and thus driving the growth for industrial real estate. Another thing that we've observed, and which is quite interesting, is the demand for quality data centers. Despite that now many people are going back to working from the physical offices, there have been also a growth in people who are working from home, and driven especially by the middle class. This has brought the need to have a quality internet, and in the same line now driving demand for industrial real estate. And another observation, especially in Nairobi County, where there is a limited slaughterhouses, and with more growth in the middle class, this means that the consumption of meat is high, hence driving the need for more slaughterhouses, and that is what has been happening on that end in regards to industrial real estate. One thing that we've noticed in the residential real estate is that now consumers are more aware and they are demanding value for their money. In so, they are compelling the developers to put out housing units which are of high quality, and that is something quite interesting to observe. Another thing that is taking shape, and we've started observing this in the second quarter of 2024 till now, is that since last year, when the Kenyan shilling was a free fall against the USD, many landlords anchored their rent on dollars. However, after the Kenyan shilling has started appreciating against the US dollars, now landlords are unpegging their rent and putting it from the US dollar into the Kenyan shilling, and this is something that is quite interesting, and we are on the lookout to see what is going to happen, especially now that the Fed cut their interest rates, which now has started signaling a probability of the Kenyan shilling gaining strength against the US dollar. So this means that we expect more landlords to shift their rent from dollar denominated to Kenyan shilling denominated rents. Something else that we have observed in the commercial office real estate is that now landlords are trying to shift their rent from dollar to Kenyan shilling, with the reasoning that the Kenyan shilling has been gaining against the US dollar. This means that putting your rent in dollars, you are going to start to lose compared to when your rent is in Kenyan shilling. Another thing that we have observed is that we've seen more activities by major operators such as Regas and Ikigai, and they have continuously acquired more spaces in areas of Westland, Upper Hill and CBD. And lastly, moving on to the hospitality real estate, this basically involves comprises of the serviced apartments. We have seen a growing demand for serviced apartments, majorly driven by the recovery of the hospitality sector from the COVID-19 pandemic, where we have seen an increased number of international arrivals, especially in financial year 2024, save for the period where we have seen anti-government protest. However, we expect that the numbers of international arrivals is going to grow and support the hospitality real estate sector. So there you have it. You are now updated with the current market trends in the real estate landscape in Kenya.